Hello and welcome. Today, we will discuss the views of billionaire Paul Singer on economic recession and the two stocks he is heavily invested in. Paul Singer is known for his investments worldwide and Elliot Management Corporation hedge fund. In a recent interview, he stated that a recession is likely in the U.S. economy. However, this did not affect Singer's investments. He still heavily invests in high-potential stocks. Let's take a closer look at the details. Today, we learned about billionaire investor Paul Singer's views on economic recession and his investments. Despite the possibility of a recession, Singer maintains his confidence in the stocks he heavily invests in. While investing is always a risky business, potential gains can be achieved with the right strategy. Remember, it is important to consider your investment goals, risk tolerance, and personal financial situation before investing. Thank you and see you soon. The S&P has increased by more than 7% year to date, and the Nasdaq has increased by an even better 15%, yet several indicators are giving off signals that are the opposite. The Fed's ability to raise interest rates indefinitely without causing another banking crisis is in doubt, and there is genuine concern that the combination of high inflation, high rates, and an unstable banking sector may result in a short-term recession. Paul Singer, a billionaire hedge fund manager, predicts that the challenging macroeconomic situation will only continue to bring harsher obstacles in the future. The 2008 financial collapse and the post-COVID inflation increase were two previous crises that Singer correctly predicted, making his present predictions highly credible. Now, according to Singer, the world's central banks are operating in a high-risk environment where they are almost certain to choose the wrong course of action no matter what they do. Singer said of the scenario, "I think that this is an exceptionally risky and perplexing time. Prices are still sky expensive. There is a substantial likelihood of a recession. We anticipate the prospect of a protracted period of low returns on financial assets, low returns on real estate, corporate profits, greater unemployment rates than those already in place, and significant inflation in the coming cycle." So what do you do? Through his activist investor company, Elliot Investment Management, Singer has been making significant investments in two stocks that have demonstrated their ability to continue recording gains. Both of these stocks have demonstrated high 12-month increases, and Singer has invested more than $500 million in each of them. The largest collection of analysts and research in the world, TipRanks, has been used to see what Wall Street experts have to say about whether these companies are worthwhile buys. Let's review the results. MPC, Marathon Petroleum. The first stock Singer has endorsed, valued $1.47 billion, and one of his largest holdings in his portfolio, is Marathon Petroleum, a well-known company in the oil sector. Marathon has a market valuation of $57 billion and generates more than $177 billion in operating revenue annually, making it the largest petroleum refining corporation in North America. Significantly, Marathon was able to outperform the equity markets by a large margin despite a decline in oil prices through the second half of 2022. The company's shares increased by 60% in the last 12 months as opposed to the S&P 500's close to 7% decline over that same time frame. The refinery operations at Marathon support this performance. Marathon manages a continent-wide network of 13 operational refineries that can handle 2.9 million barrels of oil per day from its headquarters in Findlay, Ohio. The business also operates a network of branded gas stations across the country and is a significant producer and supplier of petrochemicals such as naphtha, benzene, butane, xylene, and propylene, as well as fuel-grade coke for industrial uses. Marathon's most recent reported financial quarter, for Q22, had some significant advances. The company's top line of $40.1 billion increased more than 12% year over year and outperformed estimates by more than $4.6 billion. The main line is that Marathon's EPS, which was announced at $6.65, was $1.02 higher than anticipated and more than 5 times higher than the $1.30 figure from the same quarter last year. Even though revenues and profitability have been declining since their peak in 2Q22, the company nonetheless managed to achieve these increases. Marathon kept up its practice of providing large capital returns to shareholders along with the top and bottom line improvements in Q4. The corporation paid out $1.3 billion in dividends on common shares and returned a total of $13.2 billion to its shareholders for the entire year 2022, including $11.9 billion in stock buybacks. The most recent dividend was fixed at 75 cents per common share and was distributed on March 10. At its $3 yearly rate, it yielded 2.28%, which was above average. Marathon ended 2022 with $11.8 billion in cash and other liquid assets accessible on the books, despite these sizable capital returns. Raymond James analyst Justin Jenkins, who has a TipRanks 5-star rating, has noticed this stock. Jenkins states of MPC, dramatic cash returns to shareholders and asset base enhancements continue to become increasingly visible. Marathon Petroleum's development is continuing in a healthy manner. Results for 4Q22 demonstrate MPC's position as a top-tier refining operator with superior commercial skills because it once again managed to secure high refining margins. Investments in renewable energy, shareholder returns, and capital efficiency in the refining and midstream sectors all continue to receive rigorous capital allocation. The analyst continued, despite dramatic outperformance over roughly the past 2 years, MPC remains our top refining pick due to excellent operations, a supportive refining macro, and continued emphasis on returns by management. MPC has executed on its capital allocation and shareholder return goals. Jenkins believes that MPC shares might rise by 24% over the course of the next 12 months, and he recommends the stock as a strong buy with a $165 price objective to reflect this belief. Following the upward trend, 13 most recent analyst reviews have given MPC shares a strong buy consensus recommendation. There are 11 buys among them, which outnumber the 2 holds. At the current share price of $132.69, the average price estimate of $151.31 suggests a 14% increase by year's end. Pins, Pinterest Incorporated. The next significant investment for Singer is Pinterest, which ranks 16th in his portfolio, 5.5%, and has a market cap slightly north of $785 million. The social media site Pinterest serves as a kind of visual message board. Like users of other social media platforms, users of Pinterest post and distribute their own content to friends or the general public. Pinterest's emphasis on visual content, such as images, graphics, and videos, is what makes it unique, though. Users can more easily browse this content because it is categorized. Additionally, Pinterest has entered the e-commerce space by enabling users to set up online shops where buyers may browse and search for products. As a social media platform, Pinterest has predominantly attracted women, who account for about 2/3 of the user base of the business. The platform's user base is also disproportionately youthful, with the 18 to 25 demographic expanding more quickly than the over 25s. While Pinterest has been attempting to increase the appeal of its platform to male users, its most recent acquisition, the AI-powered online shopping platform The Yes, in June 2022, increases its capacity to serve its greatest audience of younger women. Pinterest has staying power, as evidenced by the 20% increase in share price over the past year, a significant outperformance compared to the general stock market. Despite the stock's performance, the company's financial results have been inconsistent. Pinterest's top line for the most recent reported quarter, 4Q22, was $877.2 million. Although this increased 3.6% year over year, it fell short of expert projections by roughly $9.5 million. The bottom line, a non-GAAP EPS of 29 cents, was 1 penny more than expected but significantly lower year over year. The EPS result decreased by 20 cents, or 40%, compared to the prior quarter. Deepak Mathivanan, a Wolf 5-star analyst, doesn't seem concerned about the mixed earnings but rather is more interested on the strong outperformance. One of our top picks for FY23 is still PINS. Admittedly, given exposure to discretionary verticals, top-line sensitivity is probably higher in T. The LT thesis, which focused on product improvements, increased engagement, and monetization gains, is still, in our opinion, completely valid. Through the rest of the year, collaborations and new product releases are likely to act as favorable catalysts for the stock. Given the possibility of exceeding our year projections, we believe the share's premium over comparable ad peers, 23x FY24 EBITDA, to be justifiable. The analyst's outperform, i.e. buy, recommendation on PINS is supported by these remarks, and his $33 price objective suggests a potential one-year upside of 17%. Based on 23 reviews, including 8 buys and 15 holds, PINS has a moderate by consensus rating as a whole. A modest 3% increase from the present trading price of $28.15 is indicated by the average price goal of $29.05 for the stock. Today, we learned about billionaire investor Paul Singer's views on economic recession and his investments. Despite the possibility of a recession, Singer maintains his confidence in the stocks he heavily invests in. While investing is always a risky business, potential gains can be achieved with the right strategy. Remember, it is important to consider your investment goals, risk tolerance, and personal financial situation before investing. Thank you and see you soon.